JPMorgan chief U.S. economist Mike Feroli joins us now. So given the backdrop and all the new information we've received this week, should the Fed go 50 in September?
Well, that's what we think. We think there's a good case that they should get back to neutral as soon as possible, a neutral policy setting, which, you know, is probably at the highest something like 4%, which is 150 basis points below where they are now. So we think there's a good case for hurrying up in their pace of rate cuts.
On the other hand, I don't know, services was not too shabby this morning, still an expansion. Jobless claims continue to point to lack of stress in layoffs from corporate America. So 50 might be an overreaction to what is an economy that's clearly softening but not collapsing.
No, I think that's right. If they wait till it's collapsing, I think that's waiting too long. So we think there's a good case, as I said here, to get ahead of this, any further weakness. So moving soon seems to us like the right thing to do here.
Mike, how do you do 50 and frame it in a way that minimizes the market's sense of panic? What would that sound like?
So I think Powell's done a good job of explaining so far why they've done the things they've done. And I think if they're moving back to neutral, that's not saying they're panicked. It's saying they want to address both growth and inflation risks more adroitly.
What is your sense of, so the whole, softening versus collapsing? The market has become very obsessed, and as I mentioned, hypersensitive to the idea of a growth scare. How fast do you see this unraveling?
So we don't think things are unraveling, right? We have an unemployment rate that's been drifting higher. We have job growth that's moderating. And that doesn't call for, getting policy rates down to 3 or 2%. But we do think there's no longer a very strong case here to keep policy rates, very restrictive, because inflation has, come down quite notably. So the rationale, I think, for staying very restrictive has gotten weaker in recent months. And I think you even saw that as recently as, in the July FOMC meeting. The case was already being made by several participants then for easing policy. So again, I don't think this is an issue here of the economy collapsing. If it were collapsing, I think you'd have an argument for going more than 50 at the next FOMC meeting. So I think this is really just getting back on sides. And then, if they have to raise, there's nothing wrong with reversing course. But we think, Chair Powell has, as I said, been a very good communicator, even when they've changed courses, pretty rapidly over the past couple of years. In hindsight, that was, a correct decision when they got, quite a bit more hawkish than they had been. Powell was able to explain that, and I think if they have to do, the opposite right now, I think Powell, as I said, has been a very good communicator, and I think he could, talk the market and talk to the public, more importantly, about why it makes sense to be, in a setting that can address developing risks to either inflation or employment.
On the other hand, they're going to get grief for doing this right before the election, especially if they go on a double, right? And I know that that doesn't factor. It's all they don't pay attention to that. They do what they have to do, but it's a judgment call here. And also, inflation is still above target, Mike. And I know that the signs are increasingly looking like it's coming back down to earth, but they can't be too sure, and they've been wrong before. Yeah, no, that's fair, and there's no guarantee on anything here. But as Powell has said in the past, if you wait until inflation's already back to 2%, you've probably waited too long. Waited too long.
And so there is some I think usefulness of having a forecast-based monetary policy. And while inflation's still a little above target, unemployment's probably getting a little above what they, think is consistent with full employment. So right now, as I said, you got risks to both employment and inflation. As I said, you can always reverse course if, if it turns out that one of those risks is developing.
Although they really don't want to do that.